Listen to me. If you are retired, or if you are sitting there right now looking at the calendar, counting down the months until you finally say goodbye to the workforce, I need you to pause what you are doing and pay very close attention. There is a term floating around the financial technology world right now. It is popping up on smartphones, it is trending on social media, and younger generations are talking about it like it is the ultimate financial safety net. It is called grid money. And the question I am getting from so many of you who are approaching your golden years is simple. What is grid money, and is it something that belongs anywhere near my retirement strategy? Let's strip away all the slick marketing and get right down to the honest truth. Grid money is not a traditional bank account. It is not an investment strategy. It is a financial technology app, a Fintech app, designed primarily for people who are living paycheck to paycheck and need a quick, short-term fix to get cash between paydays. For a monthly subscription fee, usually around $10, it offers small cash advances, typically under $200, to tide people over. It also features something they call a paycheck boost, which attempts to advance a portion of an expected annual tax refund incrementally throughout the year rather than waiting for Uncle Sam to send a lump sum. Now, why do I need to talk to you about this today? Because I know what you are feeling right now. I know the deep, exhausting fear that keeps you awake at 2 o'clock in the morning. It is the fear of running out of money. When you transition from a regular, predictable salary to a fixed income, it is a massive shock to your emotional and financial system. You go from being a wealth creator to a wealth protector. And when an unexpected medical bill arrives, or the car breakdown costs $800, panic sets in. You start looking for options. You start wondering if these modern, quick cash smartphone apps are the secret to managing your cash flow. You see words like no interest and no credit checks, and you think, maybe this is a safe harbor for me. But I am here to tell you to stop, take a deep breath, and look at the hard truth. For someone entering retirement, relying on subscription-based cash advance apps is not a financial solution. It is a symptom of a much larger problem. If you are retired and find yourself needing to pay a monthly subscription fee just to advance $100 or $200 to buy groceries or cover a utility bill before your next Social Security check arrives, your retirement foundation is in serious jeopardy. You are playing a dangerous game with your financial security. Think about the math here. A $10 monthly subscription fee might sound like pocket change. But if you are using that app just to get a $100 advance, that $10 represents a massive percentage of the money you are accessing. In the traditional banking world, if you calculated that fee as an annualized percentage rate, it would shock you. You must never, ever let the convenience of a modern app blind you to the actual cost of accessing your own future money. Furthermore, let's talk about the idea of pulling forward your tax refund to boost your monthly income. In retirement, your tax situation changes dramatically. You are no longer dealing with standard W-2 withholding in the same way. You are dealing with required minimum distributions from your IRAs, taxable Social Security benefits, and capital gains. The last thing you want to do is complicate your tax structure by trying to advance a predictive refund through a third-party app. If you are consistently getting a massive tax refund in retirement, that means you are giving the government an interest-free loan. The solution isn't to pay an app to give it back to you early. The solution is to adjust your tax withholdings so that money stays in your pocket every single month where it belongs. The ultimate question you need to ask yourself is not how to get cash faster, but how to build a fortress around the money you already have. Retirement requires a completely different psychological relationship with money. When you are 25 or 35 years old, you can afford to make mistakes. You can afford to live on the edge because your greatest asset is time. You have decades of work ahead of you to recoup your losses. But when you are 65, 70, or 75, your greatest asset is no longer time. It is clarity. It is stability. So, what is your actionable takeaway today? How do you protect yourself from ever needing to look at cash advance apps or short-term fixes? First, you must establish an emergency cash reserve that sits completely untouched in a traditional, FDIC-insured high-yield savings account. I am not talking about money tied up in mutual funds or stocks that fluctuate with the whims of Wall Street. I am talking about liquid cash. For retirees, I want to see a minimum of 12 months of essential living expenses sitting in safe, accessible cash. This is your buffer. This is what prevents the panic when life happens. When the roof leaks, you do not open an app on your phone to ask for an advance. You go to your reserve. Second, you must sit down and create a brutal, completely honest retirement budget. You need to know exactly what is coming in from Social Security, pensions, or annuities, and exactly what is going out for housing, healthcare, food, and utilities. If the math does not work, if your guaranteed income does not cover your basic needs, you cannot solve that deficit with financial engineering or apps that spot you a few $100s. You solve it by making the hard, necessary choices to downsize, reduce discretionary spending, or protect your principal balances so they can generate sustainable income. Do not let the flashy, high-tech world of modern fintech distort your good financial common sense. The financial institutions of tomorrow are built for speed and quick transactions, but your retirement needs to be built on a rock-solid, unshakable foundation. Be the master of your cash flow. Understand where every single dollar lives, what every single dollar is costing you, and where every single dollar is going. You have worked far too hard for far too many years to hand over your financial peace of mind to a smartphone app. Stand in your truth, protect your security, and stay safe.